Hello dear students, welcome to Devika's Commerce and Management Academy. We are discussing about capital chapter. So you know that we have discussed in the previous class types of capitals are two. One is fixed capital, working capital. And what is fixed capital? What are the factors which are determining the fixed capital? When do we need fixed capital? All these things we have discussed in the last class. Now today we will focus only on the working capital. What is working capital? Working capital means this capital which is required for day-to-day transactions, daily wise transaction. You know that permanent capital means, so that capital which is used for purchasing of the permanent fixed assets. Now here related to the current assets, when we use the capital, that capital we say it as a working capital. Working capital, day-to-day transactions like purchasing material, raw material, and the amount which is spent for the finished goods, work in process, and cash, something we have to keep it with us for day-to-day transaction, that cash, and daily wise payments like wages and daily wise wages. So pay wages and transportation pay fees, something like petty transactions purpose, we need to keep always some working capital. Working capital is very much required. When the company is having sufficient working capital, the company will have a confidence. That company will work effectively without any doubt. So that is why working capital is very much required. So working capital basically we can divide into two parts. One is gross working capital and net working capital. If you see working capital in broader sense, we can say working capital as gross working capital. Gross working capital means all types of current assets which comes under the gross working capital. All types of current assets. We know that in final accounts we have seen in the balance sheet what are the current assets, what are the current liabilities, we have seen already. So all the current assets, whatever we spent that capital for current assets, that we can say it as a gross working capital. The best example, you can take all kind of current assets like cash, bills receivable, sundry debtors, okay, so stock. So all these things we can say it as a current assets. That is, we say it as a gross working capital. All current assets, related to all current assets, whatever we are spending the capital, that is gross working capital. This is as per the wider sense. If you take it in narrow sense, working capital, in a narrow sense you can say working capital as net working capital. What is this net working capital? Net working capital means, you know that current assets are there. Current assets minus current liabilities is net working capital. Current assets, as I said, cash in hand, cash at bank, bills receivable, debtors, okay, and also you can take prepaid expenses. So all these things, stock, all these things are, you can say it current assets. From the current assets only you are going to deduct the current liabilities. What are the current liabilities? You know the list. Bills payable, sundry creditors, bank overdraft, short term loan, these are all current liabilities. From the current assets, if we remove the current liabilities, whatever you get, that is net working capital. Net working capital. That is why this formula you remember. What is net working capital means? Nothing but current assets minus current liabilities is equal to net working capital. So these are two types of division. Next, if you see the classification of working capital, that is classification of working capital, you can say it as the two types of working capital. One is permanent or fixed. Permanent or fixed working capital. Second one is temporary or variable working capital. What is this permanent or fixed working capital? Permanent or fixed working capital means some cash you need to fix it up, you have to pay it every month, that is fixed. Like purchasing raw material, every month we need to purchase say 1000 material, that is permanent working capital. But working capital, but it is permanent. Every month you have to, and every month you have to pay say current bill, that is also fixed. So that is also fixed. So like few transactions which are fixed but current working capital related items, that we say it as a permanent or fixed working capital. And second one, temporary or variable working capital. Temporary or variable means it always fluctuates, changes as per the demand, as per the price. The prices may be changing, or sometimes the cost may be changing. So that is not permanent. That is why we say it as a temporary or variable, flexible. Okay. Now let's see this permanent or fixed working capital also divided into two parts. One is regular and reserve. Regular means day to day transactions, whatever we have to pay, that is regular. As I said, 1000 units you have to purchase it every month, that is regular. Permanent, regular. Reserve means excess of working capital, that we can say it as a reserve. So 1000 you have purchased, but still you have some more working capital, that you can keep it as reserve. I'll give you more clarity. Suppose say, as per your calculation, 1000 units you have to purchase. 1000 units at the rate of 10 rupees, say. Means it is 10,000. 10,000 every month you have to pay. But you have working capital of say 20,000. 10,000 is gone. Now leftover is 10,000. That rest of the 10,000 you can say it as a reserve. Reserve means excess of the working capital, whatever you have, that we say it as a permanent working capital for reserve. Reserve working capital you can say. Then after the temporary and variable, as I told you, temporary variable means it always fluctuates. It's not permanent. Sometimes it may be more, sometimes it may be less. Okay. So that also we are dividing into two parts, seasonal and special. Seasonal means according to season, that cost will be varying. Suppose during the summer season the product cost will be more. Example, like you can take AC, fridge, so cooler, all these items. Seasonal means it varies. If you purchase the same products unseasoned, that cost will be different. So that's we say it as a seasonal. And special, there are some special products, it always changes according to the demand. The best example you can take in the present scenario, there is a lot of agitation is going on around the world, and because of this Taliban's occupied Afghan, and due to that, what is the impact on our country? Dry fruits prices shoot up a lot. So that is special case. Any kind of changes, flood or otherwise unexpected problems have arisen. So any of such cases, that working capital is fluctuating, special case. Are you getting it? So this is about the classification of working capital. But anyway, always remember, working capital is also blood of any organization. It is like backbone of any organization. If you have working capital, then only you can say that organization is going smoothly, no doubt at all, and people will have a lot of confidence. We are ready to make payments, any kind of purchasing items, or making payments of liabilities, making payment of expenses, all these things from the working capital only, right? So that is why you need to keep adequate working capital in your organization. Like we have discussed in the last class, factors determining the requirement of fixed assets, right? We have discussed. The same thing we'll discuss now, factors determining working capital requirement. Previous one, factors determining fixed capital requirement. Now, what are the factors are determining the requirement of working capital? We need more, we need less. So what factors makes the difference? So mainly you can see few things. One is nature and character of the business. This we have seen in the last class also. This point, size of business and production policy. These three we got it in the fixed capital determination also. The same thing. Like let me give you a small brief. Nature and character of the business. The nature of the business is very big. Then automatically they require more working capital, as we have discussed in the last class. Nature of business, suppose say it is like government business like government policies like electricity, water and irrigation and road repairs, railway. For such kind of things they require more fixed capital. Working capital is less required. So nature of such kind of business, we need less working capital. Where the production based organization is there, the organization is production based. Production based means they required more working capital than the fixed capital. Are you getting it? In the same way, next, size of business. If the size of the business is very big, then they required more working capital. Size is very small, then they required less working capital. Production policy also. What is the production policy? Best one you can take, suppose say they are manufacturing in the organization only. The products is manufactured in the organization, then they required working capital more. No manufacturing, directly purchasing the product, ready product from some other organization and selling to someone, then they required less working capital. So that depends on the production policy. Next one, manufacturing process, length of production cycle. Manufacturing process, which process they are following? Are they following a new technology? Are they using the new techniques? So according to that it decides. In the same way, length also, length of the production cycle, both are same. So if they are following the new technology, then automatically they may require less working capital. Means proper estimation is there, how much is required, they are selling the same one, then they need not to spend much on the working capital. In the same way, seasonal variations, as we have discussed, seasonal variations means according to the season. Proper season is there, we have plenty of products available, need not to spend much on the working capital. Where season is not there, the prices are high, you need more working capital. Depends on the season. In the same way, working capital cycle. What is working capital cycle means? I have given you here. There is this process for manufacturing to until it goes to the customer and selling. So this process we say it as a working capital cycle. It's like this. First we'll start the organization with cycle, with cash, sorry. So we start the organization activities with cash. Cash we have. Then after that what we have done? We purchased raw material for manufacturing process. After purchasing the manufacturing raw material, then we are into the working process of that product. We are manufacturing, we are under the process of manufacturing. Then after that, once if the process is completed, then finished goods you will be getting. You will be getting the finished goods, it's ready to dispose, ready to sell. Then when it is ready to sell, we are selling for sales. Then after that, these sales, if it is cash sales, we get the cash. If it is credit sales, not selling on cash basis, that is where there you are going to get debtors. Debtors means where you are selling the goods on credit basis, you will find debtors. When the debtors are going to pay the cash, then you will get back the cash. Once if you get the cash, once again same cycle, got the cash, now purchase the raw material, next after that work in process, once again finished goods, sales, this process continues. So depends on the process. If the process goes smoothly without any interruption, then you need less working capital. If the process is slow, then you need more working capital. That is what we are saying, working capital cycle. How is the working capital cycle? It is big, slow, then need more working capital. In the same way, credit policy, company credit policy, like company is giving goods on credit basis. When people are going to pay back the amount easily, quickly, then working capital is less required. When people are going to pay after long period, then you require more working capital because your capital is blocked in the credit policy. People are purchasing on credit basis, not paying it, then you need to put more capital related to this. So that is why it depends on the credit policy of the organization also. Next one, business cycle. Business cycle, how is the business? Business is going smoothly. If it is going smoothly, then according to the requirement you need working capital. It is going slow, your capital is blocked, then you need more working capital. Business cycle means nothing but the smooth running of the organization. If it is going smoothly, you required according to the requirement. If it is blocked, then your amount is blocked, you need more working capital. In the same way, rate of growth of business. How is the rate of growth of business? So sometimes the growth will be very good. When growth is good, what do? You need to produce more products because growth is there, demand is there. When demand is there, growth is there, you wanted to produce more products, then you need more working capital. Growth is not there, nothing. So it goes very smoothly. You need less products, you need to produce less, and your sales will be less, then automatically working capital also will be very less. Depends on the growth of the business. Are you getting it? In the same way, earning capacity. How is the earning capacity of the organization? Earning capacity is good, then you will find, yes, organization is good, going well, then automatically you want more working capital. Earning capacity is not good, then you don't need to put much of the working capital investments. And also dividend policy also. Earning, let me change this. Earning capacity and dividend policy. Dividend policy also. Earning capacity, as I said, dividend policy. Suppose say your dividend policy is like every month you are paying proper amount. If the organization is going smoothly, then well and good, you will be paying it. If it is not going to work well, then automatically you have to pay the dividend. For that payment of dividend, you need more working capital, right? In the same way, price level changes. Prices also always varies. Sometimes it may be increasing, sometimes it may be decreasing. If the prices are increasing to purchase the material, then you need more working capital. If the prices are decreasing, well and good, you need less working capital to purchase the material. In the same way, other factors like psychological factors or otherwise demand, supply and government policies, and you can see the unexpected problems, maybe political problems or any kind of changes in the weather like floods, any kind of things, that is also going to make difference according to the situation. That's all this is. Hope you have taken a screenshot. So this is about working capital. Working capital is very important for every organization. So basically what we have discussed today is working capital is gross working capital, net working capital. Gross working capital means this is in the broader sense. So total current assets, whatever we use it for the current assets, total everything, it comes under the gross working capital. In a narrow sense, we can say that is net working capital. Net working capital, how do we get? Current assets minus current liabilities, you will be getting net working capital. Means whatever you have current assets, from that you deduct the liabilities, current liabilities, then you will be getting, that is net working capital. And we can divide this gross capital into two parts. One is permanent or fixed and temporary or variable. Under permanent, regular and reserve. Temporary, seasonal and special. And factors which are determining the working capital requirements. These are the 12 points. First 3 points are common, whether it's a fixed capital or working capital. And rest we have discussed: manufacturing process, length on the production, seasonal variations, working capital cycle is this one, and credit policy, business cycles, rate and growth of business, earning capacity and dividend, price level changes, increasing or decreasing, other factors. Dear students, let me tell you, you just understand the concept, whatever we are studying it. Immediately after the class, you take out your textbook and read out the same topic. You will understand, the concept goes inside of your mind in long term. And in examination also need not to write exactly the same points. So these are the points which are printed in the textbook. Just suppose you are not you have not studied and you don't know these points, just simply you can understand. So what is working capital? If you have knowledge, what are the factors which are going to determine? Just think it, automatically you will get somewhat idea. So according to that you can write. And related to these concepts also, remember just side headings, inside matter you can write if you have a good idea. That's it, nothing to worry. First of all, remove your fear. automatically you will understand any subject easily. So check out the playlist. More subjects, more topics already I have covered, and also don't forget to share these videos with your friends, seniors, juniors, or anyone. So stay connected and have a bright future. Good luck.